Hello, and thank you all for tuning in to today's Money Show. Our speaker for today is Zachary Manis. Zach is the co-host of the Stock Waves and Mining Stock service within the Elliott WaveTrader.net platform, providing wave alerts and trade setups on individual stocks, as well as the metals, miners, and agriculture portfolio. He also co-hosts the site's weekly Beginner's Circle webinar for new members. Zach, the pleasure is ours. The floor is yours.
Thank you. Thank you very much, Dylan. So today we decided the topic for our webinar would be our CAB P-IPO pattern, sometimes called the Cowabunga post-IPO pattern. And it is a roadmap for how to chart new issues. And I shared a couple of links with Dylan that he's going to then share with you. And these are basically just links to two articles that I co-wrote with Avi Gilbert from EWT on IPOs and the pattern that we discovered, as well as just a link to the Stockwaves dashboard at Elliott Wave Trader. And using that same link, you could get to the education section where there's a lot of free resources. And I'm going to reference a few of those just in a very, very quick crash course on what we look for Elliott Wave structure. So Elliott Wave needs at least some sort of price history and ideally an established trend. We're looking for repeating patterns of a fractal nature. And the most basic way of talking about it is we're looking for repeating patterns of 5 waves up and 3 waves down. And that same 5 waves up and 3 waves down can be the 1-2 structure inside a larger move. Sometimes there are patterns that are unfolding to the downside or at some degree. So maybe you're looking for 5 waves down and 3 waves up in those. But the basic structure is we're looking for 5s and 3s. And those are written out in different nomenclature that corresponds to the different degrees. And then those corrective structures, the moves down, are usually referred to as ABC moves. Sometimes there's a few different letters that are used and things can get a little bit more complicated, but that's really the very basic structure. And I guess unless someone is going to really zoom in to 5-minute or 3-minute or even 1-minute charts, when something starts trading from an IPO, there's really very little history. So we don't have much to reliably go on in terms of any kind of established trend or reliable wave structure. And so the best swing setups that we're looking for, we want to see these repeating wave structures, the 5 waves up and 3 waves down, recognizable on at least hourly and 4-hour charts, if not even on daily time frames, to really have more conviction and confidence in a chart setup. And so since Stockwave's inception nearly 10 years ago, I'd really avoided looking at newer issues because of this lack of chart history, and that, you know, Elliott Wave relies on sentiment, and most of the sentiment that's involved with IPOs is basically just media hype until you actually have some trading track history. And despite that, people always ask me about it. So, you know, particularly when there's wild swings, when something just came off the IPO and you pull it up on a daily chart and there's maybe only 1 or 2 bars. But in 2015, there were a lot of very overhyped IPOs. And so there were some more high profile ones as well. And so I started digging a little bit deeper into some of those recent ones, and a very distinct pattern started to emerge. And so after maybe an initial move up, that they would then go on to get a larger ABC correction. That correction usually took price down about 50% of where they started trading on the exchange initially. That's not the same as the IPO price. So this is, you know, the published IPO price or whatever the news media might have talked about might have been 35, but maybe there was an initial jump and it started trading at like 37.20. So we're talking about usually seeing a haircut of about half of that initial exchange price. So in November 2015, Avi and I put together some of those findings in that first article, Why You Should Not Buy IPOs. And in that, we looked at examples from Baba, Facebook, Etsy, PRTY, as well as Noodles and SFM, Seas, and Boja. And a lot of those did fill out, the same patterns, and many of those that low that they made after that initial ABC down to about 50% haircut was the all-time low for a lot of those. So in the article, we also postulated that the companies usually IPO when they are, for whatever larger degree, somewhere in this part of the pattern is when they decide to launch and end up launching that IPO. So if you're talking about, a 5-wave structure, is a fractal, then launching an IPO somewhere in here, you're going to get this large A, B, C move down as a corrective retrace that usually is going to take price to significantly under where that came on the exchange when it started trading. And that's what we are seeing a lot of times, that what was either a larger degree wave 4 maybe, or a larger degree wave 2, or sometimes just a big corrective move down that was not reliable as any kind of significant bottom. So I'm going to read 2 quick excerpts from that article before we go on. One is, when a company has sufficient growth and interest that it has become a candidate for an IPO, it is most likely approaching the top of what we would call a 5th wave in Elliott wave parlance. This is usually the stage within the cycle of a stock when the excitement for the stock has reached the point it exceeds its true value. In fact, fifth waves usually exhibit the largest amount of optimism and euphoria about a stock relative to the rest of the cycle, and is often when an IPO for the stock is released. And then what we know about 5th waves in Elliott wave terms is that once the stock completes that wave, it usually retraces back towards the 50% or the 61.8% retracement from its high. In this case, we don't necessarily know the measure of this part of the structure. We just know that what we're seeing is often a 5th wave of some sort, and then a larger retrace after it. But I think if we had price data going back that far, before these were publicly traded, then we would probably find that a lot of the larger retracements are hitting actual Fibonacci retracement levels. So here's an illustration of that standard structure. I blocked out whatever chart this actually came off of, but it was an IPO projection from something that's one of our members asked about. Looks like this was probably back in May of 2019, so you might be able to take some guesses at what the stock might have been. But usually we saw some sort of ending final pattern or to move higher from where it came on the exchange. And then from there, and a lot of times that would be a small ending diagonal. For definitions and tutorials about what an ending diagonal is, see that education section on the Elliott Wave Trader website. But then from there, we would trace out this larger ABC move down. And again, everything subdivides in Elliott waves. So within that A wave, we're going to look for an ABC pattern. Within that B wave, we're also going to look for a clear ABC pattern. Seeing that clear ABC down and an ABC move up to a fib retrace sets up a pretty high probability measured move down for a C wave target of 5 waves down that can often be an impulse. So that is the standard model. Now we'll get into a couple of examples. So here is a Facebook chart using a 2-hour looking all the way back to May of 2012 when it IPO'd. It got that initial pop higher after coming onto the exchange around $38, popped up to about 45, and then over the course of the next several months into September, filled out that large A, B, C move down. And we can even see inside this structure an A, B, C down for the A wave, an A, B, C up for the B, and then 5 waves down here in the C wave. From there, we got a larger 5 waves up and then another corrective retrace, and Facebook went on to be incredibly bullish and since then, and continues to be pretty near all-time highs. And this low, incidentally, was in the 18s. So roughly a 50% retrace from that initial exchange price of 38. Alibaba had a little faltered initially, but then got that initial 5-wave move up after it came on the exchange right around $99, and then a larger ABC move down with ABC inside the A and ABC up in the B wave, and then 5 waves down in that C wave, down to a low in the 55 region. So very close to a 50% haircut as well. And then that got 5 waves up and then held a higher low as a corrective retrace and was able to be very, very bullish since then. The next one, ETSY, initial IPO was right around the 31 region. Did get a little initial pop, but didn't go so high, and then fell down in that same ABC pattern, down to under, well under 50% of that initial IPO price. But you know, there's a clear B wave bounce, even though this would have been enough for all of that move. We didn't have a very clear ABC structure inside this initial move. So we were very skeptical of any move up as a bounce there and started looking for lower moves down as well. But again, that turned out to be a pretty significant low and went on to be pretty bullish from there. Snap, again, came on the exchange right around $24, $23, and initially popped higher into the higher 26, 27 region, and then filled out a larger ABC down. That would have been enough again for all of the, you know, to satisfy a 50% haircut from where it started trading. But the move up again in Snap was very clearly corrective. This is a more complex pattern that doesn't have a clear 5 waves up and a C wave, so we count it as a WXY, and then filled out a larger C wave down. But then that low, filling out the bigger ABC, turned out to be pretty significant on Snap as well, and it got a nice 5 waves up off of that, held a corrective retrace in the 2020 lows, and then has been very bullish from there. This chart goes back to a period of time where I was using TC2000 a little bit more. Now almost all of my charting is on Motive Wave, but was joking around where, you know, just had a few trading bars on the 2-hour chart for race after it IPO'd. Had an initial spike higher, so I put check in parentheses, and then was looking for an ABC move down to fill out down towards the 31 region, because it started trading on the exchange right around 55, 57, 60. So then here's a chart showing how that ABC move filled out. Going right back, this also, you know, we don't really place as much of an emphasis on timing with Elliott Wave, but sometimes we can have a general idea of the shape that a pattern should take, and that gives us some approximations for timing. So here we're looking for a possible low around March of 2016 for that larger ABC move to fill out. And sure enough, we had our low in February after this ABC move down right into the 31 region. And then from there, we've been bullish race ever since, especially when it gave us a nice 5 waves up and a corrective retrace into our target retrace region, and have been very, very bullish since then. Sprouts, again, initial IPO price around 33 is when it started trading. I say IPO price, but I mean where it started on the exchange. Got that initial spike higher, and then a larger ABC move down, taking it down into the 16 region, 1640 in the August 2015 low. That never really yielded a very clearly bullish pattern off of that low. Holding a higher low here, we were looking for at least a measured move up as a larger ABC. Got 5 waves up in a C wave, and then that looked like a corrective flat. So we're looking for another C wave down from there. and we got 5 waves down for that C wave to a pretty significant reversal off of the 12s, and then that went on to fill out 5 waves up and hold a corrective retrace from there. And so we've been bullish since that retrace in late 2020. MRNA, here's another one where we didn't get the initial spike higher. We filled out something of a corrective retrace, but then got 5 waves up to a higher high over that initial price where it came on the exchange in the 21s. And then not the cleanest ABC move down, but it did come down enough to basically cut that initial exchange price in half, and could count as a small A, B, and then a drawn out C wave to get to the target. And then after holding a higher low, we were able to be bullish and looking for more 5 waves up. And then after that 5 waves up from that post IPO low, we filled out a larger 5 waves up and 3 waves down into the March and April lows in MRNA. So that was something, that gave us a lot of confidence to be very, very bullish in early 2020 on Moderna. Duluth, another really great looking textbook pattern. Came on the exchange right around 1350, got a very clean ending diagonal up for that initial move higher, and then filled out an A, B, and then a big 5 waves down to a C wave, certainly well under 50% of a retrace from that initial move higher. So sometimes, you could say maybe this is enough for all of that drop down, but when you don't get any kind of clear movement off that low and holding a higher low, then you start to look a lot lower. Nice setup on Duluth as well for 5 waves up here. This is kind of a higher than ideal retrace, or shallower than ideal retrace, I should say, for the larger wave 2, but got another 5 waves up off of that and are holding corrective support as a 1-2-1-2 structure. So as long as the 1350 region holds, there's a lot of very nice immediate bullish potential in DLTH. Mass is a more recent name, IPO'd at the end of 2020, got that initial move higher. Right now it looks like it's pretty close to filling out all of the rest of that C wave, the A, B, and then 5 waves down inside that C wave, trying to complete down into the low 20 to 18 region after coming on the exchange right around 45. So that's certainly one that we're keeping an eye on, looking for some initial signs of reversal and then holding a higher low, and then we can look at the bullish potential projected from there. ARVL is another more recent name. Again, came on the exchange right just under 20 bucks. Initial pop higher, an A. Sometimes this B wave can get pretty high. ABC down. Again, maybe this was enough for all of that move, but when we only got 3 waves back up, using that same initial price now as resistance, we're looking for a potential move down lower. This can still be filling out more of the 5th wave, 1, 2, 3, 4, and further has room to head further down under 6 in that 5th of C, but then we start looking for potential signs of a more significant bottom there. There have been exceptions to the rule. So I can't claim to have looked back at every single chart to see if in fact there's at least a small CAB PIPO pattern at the beginning, but we found hundreds of them. And certainly most IPOs in the last 5 years have confirmed to that with very few exceptions. One notable exception is not from the last 5 years, but it's from 2004. Google shot up right after its IPO. It did get a corrective retrace, but that corrective retrace didn't make a lower low, and it has gone up steadily since then. In 2007, that filled out 5 waves up there. So we're counting it. It's still deep inside. Well, it's in the large, it's near the probably 2/3 of the way done with its larger cycle degree wave 3 after the lows in March 2009 count as its cycle degree wave 2. But a couple of other exceptions that we've seen, not many of them come to mind at the moment, but something really has to clearly start to move past some initial, resistance for initial spike higher. And it's not that I'm automatically looking to short anything, after that initial move higher. I would really only short something with so little history if you have, a very clear structure like this as a B wave, and then a very clear definable structure or target region for a C wave down with a very definable risk reward for where you could put a stop and some resistance. But for anything, even things that are going to make an initial move higher that might be a little bit more, have a little bit more bullish potential, like maybe Duluth after this 5 waves up was going to be more bullish. And so, here could have been a corrective retrace of this initial move up and had potential to maybe break out of the risk of the downside pattern, but it couldn't really hold anything and get anything very bullish going. So down it went. All right. So
Hey, Zach,
why?
I just want to give you a heads up that we're about 10 minutes away from end time here.
Okay, so I'll finish up here and then I'll open it up to some questions. So just a little bit of background on the, the PIPO is pretty easy. That's post IPO. So what does the CAB mean? When I first started at EWT, I went by the moniker Cowabunga, and many of the members called me Cow. And sometimes I jokingly made that a very formal name of Cow A. Bunga. So that's the CAB. A lot of people get confused because we're looking for a large ABC move to the downside. And they think that I just typed that wrong. No, but it is CAB PIPO. So Dylan, are there any questions?
As a matter of fact, we do have some questions. First question is, how does the sector or fundamentals affect these patterns?
So Garrett and I largely ignore fundamentals. We did bring on Lynn Alden as part of Stock Waves. She writes articles and she kind of has a different fundamental approach than a lot of other fundamental analysts. And she also looks very closely at different metrics for valuation. And she looks at our charts and kind of weaves together a story. And a lot of times what she's looking at fundamentally, she sees a lot of alignment with the way that we're looking at things from a technical standpoint. But for the most part, we're ignoring a lot of those fundamentals when and other, and maybe we're looking a little bit along the same lines as sector. If an energy stock were to be IPOing, say in August or September, we probably would have given it the benefit of the doubt that it was going to follow through to the upside with a larger swing that we were looking for in most other energy names, just by virtue of being included in that sector and that rising tide lifting all of the ships. But for the most part, we're really just saying, until this either clearly proves that it's something else or fills out that larger ABC, we don't really want to have much to do with it.
Thank you so much for that answer. I think that just about covered it. And the next question is position on SPACs.
Oh, on SPX? We're still, Stock Waves, has the benefit of looking at hundreds and hundreds of stocks and sectors. So our view of the broad market is colored by that bottom-up approach. So Garrett and I sometimes have a little bit of a different view of the broad market than Avi and Mike and Jason that are covering it in other services. And we don't focus directly on the S&P 500 in Stock Waves. We're much more focused on individual sectors and individual stocks. But we do keep an eye on the RSP, the equal weight version. I think all of us are in agreement that we're in a larger primary wave 5 that started back in the March 2020 lows. And at maybe some of the higher the higher market cap tech is a little bit further along and due for maybe a little bit larger consolidation. But most mid caps and most of the S&P still looks very much in the middle of the third wave of that larger fifth. So we're bullish long term, but always looking for rotation opportunities and for some consolidation in the near term.
All right. Next question is, do you believe algorithms utilize E-wave? If so, is it self-fulfilling?
So you could program computers to try and trade based off of retraces and trying to recognize patterns. There's a lot of nuance, and there are only a few hard and fast Elliott wave rules. A lot of other things are just interpretation and using a lot of different guidelines to see what is the best fit and best interpretation given the context, and what's the most high probability outcome from there. And I have not seen anybody come up with a black box or an algorithm that does that as well as we do, and we're trying to do that as well. But there's so much nuance into there can be different interpretations that are valid, or a computer can count waves and get to a valid wave count that just doesn't look right. And teaching that right look, even using pattern recognition, is just very, very hard to program. So there might be some algorithms that are using some of the rules and some of the guidelines. And we certainly have seen a lot of retracements that get exacerbated. I was trying to see if I have a good example. Here's a good example on Duluth that the normal corrective bounce might have stopped here for this B wave, but it got an extended fifth of what would be an A, B, C wave up. So the fifth wave of that C wave stretched and extended as it tried to maybe break out to new highs. And so we see a lot of stuff like that these days, where a part of the wave pattern might get stretched out a little bit or exacerbated, but at the end of the day, things are programmed by people, and people succumb to sentiment.
All right, we got a couple more questions for you with time permitting. All right, what money management exists that should be applied to Elliott wave analysis?
So that's one of the things that we've tried to adapt with our wave, with the way that we structure the wave setups. You have a couple of rules and guidelines. For example, a wave 2, so you could have what looks like 5 waves up, and the wave 2 retrace only actually invalidates when it breaks under the start of that move. But buying a potential 5 up and 3 down for a bullish move with all of this room below it is not really good money management. So you need to apply the strict academic interpretation of Elliott wave to something that is more practical for trading. So we look at a standard support zone and we show what we think are favorable risk reward setups, and we always recommend that people use stops and size things pretty evenly across the board. Don't go too overweight in any one name or any one sector, because we look at letting the math work in our favor. So we're by default, almost all of the setups that we look for based on Elliott wave guidelines are going to have somewhere around a 1 to 3 or better risk reward ratio. So if you follow sound risk management practices, then it really doesn't take that good of a batting average to just break even. And when your batting average is closer to 70% of the time that the patterns that you're looking for are playing out, then you can do very, very well.
All right, I think that just about wraps us up here. Once again, I'd like to thank Zachary Manis for joining us today here at Money Show, and I'd like to thank all of our attendees for coming. Have a great day, everyone.
Thank you very much, Dylan. Appreciate it.
All right, Zach, we are no longer streaming live. I just want to say thanks again, and it seems like people really were into the whole analysis of things. So
Awesome.
thanks again, and I hope that we can do this again in the future.
Do you know approximately how many people were logged on?
I can't see numbers. I can only see the chat, but if you reach out to your sales representative, they'll supply you with that information.
Okay, great.
Awesome.
Wonderful. Thank you so
Hopefully
much.
you have a good day and take care.
All right, you too. Bye-bye.